Hello, everyone. Hey, a better day today in stock market land, wasn't it? Thank you all for joining us today. It's a special day. I'll tell you why in a second. Uh, what could you say about today except that we had 2 days of the Dow going down 1,200, stocks getting pounded, all over worries about the oil industry, about the price of oil, going negative. We're hearing a lot of things. Does this mean that you could actually get paid to take somebody's oil? Does it mean you should get gasoline for free? Well, there are a lot of opinions on that last part. But just to show you a couple of things, the best part of the day so far today, besides the fabulous guest I'm about to bring on, I'm going to do a quick share screen with you. And we'll just do a quick market update, okay? And then we're going to get into the reason why we're here today, okay? So the best thing about today was the Dow had what I would consider a decent rebound, up just about 2%, S&P up 2.3%, NASDAQ up almost 3%. So we had a decent rebound basically on the back of superb earnings from companies like Snap and Chipotle. There were a few other good ones out there too. Plus, we had been overbought after 2 very good weeks in the market. We were due for a little bit of a pushback, a little bit of a pullback. So we just got it. But today, the real news is the price of oil. And you can see here, I made this as big as I can on my screen, but you see where it says oil up 252 right here. This is oil here, not Brent oil. We'll talk about the difference between oil and Brent in a moment, but up 21, just about 22%. So that gave investors a little bit of a breather and allowed stocks to go up a little bit more because the price of oil took a little pressure off. Okay. The dramatic drop in the price of oil, it's emblematic of a few things, in particular, the impact that it has on the overall economy. Lots of layoffs, a lot of banks, financial services companies loan money to the oil industry. And oil, employs a lot of people, the oil industry. So when you see oil get hurt the way it's been and panic set into the oil market, it really scares a lot of people. And that's why we had such a tough couple of days this week. I'm glad the market was not up, like 1,000 points today on the Dow, for example. I've been telling you for a while, I don't like these giant up days because then they're followed by a giant down day. I'm more into right now a lower volatility, stability type market. Okay. And what else do we have here? So the market was up, energy was up, and now I want to introduce to you our fabulous individual right after this commercial break. So I'm going to roll the intro, and then we're going to bring in Andrew Goldstein, and I'll tell you all about that. So here we go. Okay, and we're back. First of all, I'd like to welcome everybody to Be the Boss of Your Money. My name is Mitch Goldberg. If we haven't met yet, I'm a financial advisor with the wealth management firm Client First Strategy. And if you're watching this in the live stream, certainly go ahead and ask any questions that you may have. Andrew, our guest today, would love to answer them. We're going to talk about that. And if you're watching this in the replay, I'd like to welcome you as well. And if you do have any questions, certainly go ahead and ask in the comments, because Andrew and I will be checking back later tonight for any questions that we may have missed. So right now, I'm going to bring Andrew into the stream. Here he is, Andrew Goldstein, president of Atlas Commodities in Houston, Texas. So Andrew, how are you today?
I'm good, Mitch. How are you?
I'm fine. I want to thank you for joining us. You are the perfect person to have right now with everything going on with the price of oil. And I think a lot of people are very confused because it seems like there's all kinds of numbers going around, prices for oil. We don't know what the heck the deal is, the volatility. It's scaring some people. It impacted the stock market. It's impacting the economy for sure. So before we get into what the heck is going on with this crazy oil market, give us a little bit of background about yourself, who you are, where you're from, what you do.
Sure.
Take it away.
Well, first off, I want to thank you for having me today. And, I'm glad to see that you're doing well. And I hope that you and all of your viewers are healthy and safe in this current environment.
Thank you.
My background, I've been in the oil industry since 1998. I started out as a trader on the New York Mercantile Exchange in the crude oil pit. trading the WTI contract, which is what everybody is speaking about right now. And I did that for about 18 years. I made a shift in my career a couple of years ago and came over to the brokerage side of the commodity business, which is what I'm doing now currently as president of Atlas Commodities in Houston. We are a wholesale brokerage firm, and to put that in layman's terms, we basically facilitate deals between traders.
So you're kind of like a trader's trader in a way?
Well, we're not doing any trading. We're doing the brokerage for them, structuring the deals, finding the other sides of the trades for them when they can't.
I'm thinking of like the $2 brokers on the New York Stock Exchange. Is either I'm totally wrong or that ages me a lot or whatever.
A little of both. A little.
Okay, a little bit of both. Thank you. So Andrew, here's why we're all here. Why people are watching this. Okay, and again, if anyone's out there and you have a question for Andrew, he's right here. You have a question about the oil market, you're not going to find a better person to ask than Andrew. He knows more about this stuff than anyone I know. So I'm really fortunate to have him, all the way in Texas, decided to join us, and I'm really appreciative. So here's the big question. What the heck is going on with the oil market?
Well, there's a lot going on. So to make it simple, since the beginning of the year, crude oil is trading around $70 in January. So we're off about 80% in the price as of where the market settled today at $14. There are a couple of factors. The advancement of COVID-19 to the levels of having basically countrywide quarantine is putting a lack of demand on airlines and driving as well. So you have all of this oil supply, but you don't have the current demand for it. Yet the world is still pumping oil and still producing oil, and they have nowhere to put it. So we saw the price of oil just 2 days ago go, I think it settled $37 below zero, which is the first time I have ever seen that. I was trading on the mercantile exchange for many years, and the lowest price I ever saw in my time down there was about $10 a barrel. So this was surprising to some people who are not in the industry and didn't realize that oil could go below zero, unlike an equity. And for people in the industry, they were expecting something like this to happen, but it really wasn't talked about until the May contract was expiring, which was yesterday.
Okay, so without getting too technical,
okay,
how could it go below zero, and what the heck is a May contract? Because a lot of people, I get it, the May contracts are expiring, and there's not only is there nothing to roll over, but maybe traders are out some money and they have to get into the June contract. But most people don't realize that oil is traded with futures contracts.
Sure. So oil, like you said, oil is traded in futures contracts. So the May 2020 contract expired yesterday. So that means that contract can't be traded any longer. So,
and what did that contract originally do for people? What was it meant for?
I'm not sure I understand the question.
Well, the contract, it used to be $20 example for that contract, right?
Okay.
And that $20 contract, if somebody bought the contract, that gave them the right to buy oil from somebody at $20 a barrel?
If somebody bought one contract is the equivalent of 1,000 barrels of oil. So if somebody was buying one contract, and when the contract expired at the end of that day, if they were still long that contract,
I mean, if they own that contract.
Correct.
Right?
If they still own that contract, they would need to physically take delivery of 1,000 barrels of oil for every contract they owned.
For $20 a barrel in this example.
Correct. Whatever price it was at the time. Yes, that's
okay.
Sure. So go on. So the problem is that you had Russia and Saudi Arabia flooding the market with oil. They were producing as much as they could because they wanted the price of oil to come down. And obviously, the more supply you have, the supply and demand, the price will come down. But at the same time, we had COVID-19 come into existence, which really took over. And it's the lack of, as I mentioned, the lack of demand right now because the airlines aren't flying and not many people are on the road.
So let me get this straight. About I want to say a month and a half, 2 months ago, Saudi Arabia and Russia, they call it OPEC+1, right? They had an argument, and one of them said to the other, you need to cut production. No, you need to cut production. I think the Russians said, no, the Americans need to cut production now, and we're not cutting our production. And then Saudi Arabia cut their price of oil, decided they're going to pump like mad. So Russia goes, we'll pump like mad. In the meantime, the United States is already pumping like mad.
Correct.
So you had even more supply coming on, and then you go crashing right into this COVID, social distancing, self-quarantine economy, and that's basically more demand, no supply at the same time. I mean, more supply, no demand at the same time.
That's correct. Now, we've had instances throughout history where the price of oil has been affected by what's going on in the world. We've had back in 91, the first Iraq war. We had 9/11. We had, unrest in the Middle East at all times. Back then, America was an importer of oil. We've now become an exporter of oil. The state of Texas alone produces more oil than Iraq and Iran, both countries, not combined, but both countries stand alone. So there's all of this production, and you can't just cut production off. So we realize now that we don't have the demand. We can't just stop pumping. The problem is the refineries purchase this oil to refine gasoline, jet fuel, heating oil, whatever products they're refining it into. And now there's just no demand for it. So that now they're sitting there owning this oil at wherever they bought it. It could have been $70, it could have been $40, it could have been $25. Now they need to get rid of this oil. So with that contract expiring, they needed to do something with it.
Okay, so the way I understand it, these contracts give the owner the right to purchase 1,000 barrels of oil at a certain price, and the seller of the contract has to sell it. So
Correct.
there's a contractual obligation.
Right. They deliver the oil. Yes.
Right. But really only the refiners are really taking possession of the physical oil. I mean, it's not like you're going to take a contract and put 1,000 barrels of oil in your swimming pool out back and wait for it to go up.
Correct.
So maybe you store it in your neighbor's swimming pool, but not in yours. So I'm so funny. I crack myself up. But as the contract expires, like the April contract, or the May contract just expired, right?
Yes.
So even though it's still April, it expires like a little bit, or 2 weeks early or something, right?
Correct. Always
then,
on the 20th of the month.
Okay. So then but as it gets closer to expiration, the contract does become worth less and less. And then I guess, right? Am I right? There's a time value?
Currently, it became worth less and less. I mean, that contract could become more valuable towards expiration, depending on if there's excess demand and we need the oil. But right now we're in the opposite situation, so it did become less valuable. So much so to the point that these people. So when producers are producing oil, let's say I'll use ExxonMobil as an example, just for a name.
Sure.
They're producing oil, and they know that it's going to cost them X amount of dollars to take the oil out of the ground, refine the oil, ship the oil, store the oil. So they want to hedge their production years ahead of time. So in 2017, they might have been selling this May contract of 2020 because, like we said, futures oil trades in futures contracts. So they knew what the amount that they're going to be producing, and they want to hedge that price for the May 2020 contract. So they may have sold that contract at $50, $60, $70, wherever it was. There's somebody on the other side buying that contract, and a lot of time that's the banks. So now the banks have the length in this contract. They don't necessarily want to take delivery of it. And now as it gets closer to expiration and this price is coming off, if you look at the volume that traded between $0 and negative, I think the low was around -40 on the day. It was very thin volume because there were no buyers out there. But the banks or whoever was on the other side of that trade needed to get out of that trade and needed to sell it at whatever level they could.
Okay, so it's not really selling what you want; it's selling what you can.
Pretty much
in that case.
Yeah.
So now let's go to today. Oil. Now there's two kinds of oil. A lot of people might not know this. A lot of people do. there's West Texas Intermediate. That's the kind of oil that we drill for in the United States.
Well, that's the U.S. benchmark.
Okay, the U.S. benchmark.
Right.
And that's like, they call it landlocked oil because we're getting a lot of it from, like you said, Texas and Oklahoma.
Well, also the delivery point is Cushing, Oklahoma. So that's really landlocked.
Okay, so it's and then it goes around through pipelines, I guess.
Correct.
And then there's Brent, ocean-borne or seaborne.
Well, Brent crude oil is really the worldwide benchmark. You know, the United States has their own, but that's the European or worldwide benchmark. And there's always a difference in price between the two of them. You rarely see the Brent contract go below the price of the WTI contract. It typically, over my experience in my 20 years in the industry, or 20 plus years, you've seen that contract anywhere between flat between the two prices or up to, let's say, around $12 where Brent is trading over WTI.
Right. So WTI, the oil that we store in Cushing, Oklahoma.
Correct.
And this is the big one that everybody was talking about that went negative.
Yes.
Because we're talking about two prices of oil, the Brent oil, the overseas or international price of oil,
right,
and our own oil,
right,
I think. Now, our own oil is 13 a barrel now?
Well, now we're trading the June contract, which settled today at $14.
14.
$14.01.
Okay. And the Brent is about 20?
Settled 21 today.
21.
Oh,
so
I'm
that's,
sorry. The Brent.
Yeah, $20.98. I'm looking at that. So about 21, give or take a couple of cents.
Right.
But if you do that, that's a 50% rise over 14.
Correct.
So have you ever seen a 50% differential, like percentage wise, than this?
Well, typically as the price of WTI gets lower, that percentage is going to increase because just, the lower numbers. But if June is trading $50 and WTI is trading $50 and Brent is trading 60, obviously you're not going to have that same percentage. So I couldn't tell you if I've ever seen a 50% increase. Probably not, but that would be something I need to look back on charts.
Okay. So we have an issue with supply, and I have a couple of questions. I have a couple of screens. I'm looking at another one over here. Okay. So there was talk, could somebody really get paid to take oil off the hands of the bank, for example, that doesn't want the oil? Now, I know like we're not consumers going into like the Walmart of oil companies and buying oil, but is that what was happening? Was there anybody who actually got paid? Did this actually happen? Someone got paid to take oil?
So yes, if somebody bought that contract below zero, in essence, they should get paid to take the oil. But there are speculators out there also that may have bought the contract below zero and then sold it out either higher below zero or above zero. So if somebody bought it at minus $37, they might just be trading that contract, buy it at minus 37 and sell it at minus 36 and take a quick profit. But if somebody did buy it below zero and expired owning that contract, they will get paid to take that oil.
Because if you bought it negative 37 and expires at zero, I mean, technically you did make a couple of bucks on it. No?
Well, no, because if you're still long that contract, you own it and you must take delivery. It's not an option. It's not like an option where you have the option to buy it. If you're long that contract, you must take delivery. Okay,
so this is serious business. I mean, I don't know if a lot of people know that you better have the cash set aside to take that, right?
Well, and it's a zero-sum game. If somebody's long a contract, somebody's short a contract. So that short is going to expect to deliver it to that long.
Right. So I guess what I'm trying to figure out is, did somebody somewhere or a lot of people get their faces ripped off?
Absolutely.
In this market?
Absolutely. I'll go back to the example of the banks. Mm-hmm. The bank bought the contract from a producer at $50 and they needed to sell it at negative $40 to get out of that contract.
It's worse than a total loss.
It is. It's twice as worse. They lost $90,000 per contract that they were long, just based on those numbers.
That is pretty interesting. It's amazing.
And the banks aren't buying one contract; they're buying thousands.
So how does this affect the price of gasoline? Is that something you're okay opining on? I mean, obviously the price of gasoline should go lower.
Yeah.
But are we? And Are we seeing it now? I think we're seeing it now.
I think that we've seen it over the past couple of months, as as crude has come off from even the $40 level down to $20. We've seen it at the pumps, and we're always going to see, as the price of crude rises, we're going to see that increase at the pumps faster than we're going to see the decrease. And no, nobody's going to pay us to fill up our tanks. We'll always be paying something to fill up our tanks, but as we're down here, we should see. I mean, I'm going to see $1 a gallon down here in Texas any day now.
Okay, I don't think we'll see it quite that. Maybe New Jersey. New Jersey is always the, the best deal for gas. Yeah. California always the worst. Well, Hawaii is probably always the worst. Do you see this weakness persisting in the price of oil?
Okay, so that's an interesting question. So if you go out there's what's called the curve in crude oil. The further out you go on the curve, if you look at 1 year out right now, the future. I just
want to I'm going to put your website up while you speak.
Okay, thank you. So if you look at the futures contract for June of 2021 right now, it's settled today at 32 and change. So you're talking about $18 higher than the current spot contract. Spot means the first contract that you can trade, the June contract.
And the June contract is at what now? 14?
It's settled 1401 today. June of 2021 settled 32.32.
32. Okay.
So what that says to me is that people in the industry think that over the course of the next 6 to 9 months, that things will get normalized. People will start traveling again. The demand will be there, and hence the higher price of oil a year out. So right now, even if everything were perfect today, even if COVID-19 disappeared and we got back to traveling the way we were beforehand, tomorrow, the prices would still, there's so much excess oil that what's there now and what's still being pumped and what's still being produced, the prices, I see them, remaining at a low level for at least 2 to 3 months if things changed immediately. So there is going to be a lag as to when the prices go back up.
And I don't think any of us expect things to change immediately. So that this could be very, very persistent. Hey, I have this up here from your website. Tell us a little bit about your, your philanthropic endeavors over at Atlas.
Okay, so Atlas Commodities is one division of a holding company, Iapetus Holdings. And we also have a retail energy division and a field services division, which we can get into another time. Mm-hmm. But we have what's called Atlas Scholars. And this program was started by our CEO. I'm not even sure exactly when, but I'm going to say
2011. Probably. I have it right. You can't see it. I can see it.
So I was right on the mark. And what Atlas Scholars does, it brings high school students in, some who may have the exposure to the energy industry and others that don't. And we bring them in after 10th grade. It's a very strict interview process. It's very selective. Once they are in the program, they're in the program for 3 years. So they're here with us the summers after 10th grade, 11th grade, and 12th grade. They learn all about the energy industry. We have guest speakers come in. We take them out on field trips to trading floors, refineries. It's an amazing philanthropic program and something that is really gives back to the community.
That's terrific. And you're involved with something yourself, the Warriors Project or something, right?
Well, I've volunteered some of my time with Wounded Warriors and with the Adaptive Sports. Wounded Warriors through the Adaptive Sports Foundation. That's actually based up in Windham, New York.
Okay, terrific. And let's take a look and see who is out there. Okay, we've got a few people. Hey, we've got quite a few people out here. Okay, you see, this is what happens. We've got a bunch. We've got a couple of likes out there. We've got Larry Cohen. Hey, Larry, great to see you, my friend. John Robertson, who was my guest yesterday. And we've got a couple of hearts out there, too. Oh, we've got a few. One of them I do see is Larry Cohen again. Okay, and my wife, Judy, gave us a heart, too. My wife is about 7 or 8 feet from me. No, we're not social distancing. I'm working from home, and my couch is like right there. Okay.
Thanks for the love, Judy.
All right. So here's Larry. What about selling cars and small businesses like Brody Motors affected by the oil market?
I'm not exactly sure who Brody Motors is, Larry. So I really
Is that one of the questions that I should have screened before I put it up there?
absolutely.
Okay. Well, the car market is pretty dead, but I'll opine on the car market right now. I think outside of Tesla, because Tesla actually makes cars that people want to buy,
Right.
this just puts off any motivation to have a more fuel efficient fleet on the road in America. So more power to the inefficient gasoline. How about that? Okay, inefficient cars. Matt Merson is out. Hey, Matt. Matt is on my streams often. I always appreciate that, Matt. Thank you. Matt says, "What up, gents? Good to see you, my friend."
Hey, Matt, good to see you.
Can the oil be used cooking oil? That is very fun. But folks, if you're watching this, we obviously all know each other and know we're Matt. Matt, you could use crude oil for cooking oil if you want to. So
I don't think it would be too easy on the stomach, though, Matt.
You let us know. We've got Adam Finkelstein. Definitely not putting that comment on the screen right now. Let's see. Okay, Larry has another one, but we're going to leave that for later. Matt's bringing up Bitcoin into this. No, we're going to skip that. And this is a nice one. Larry Duberman. Hey, fellas.
Hello,
good to see you, Larry. And here's a real question. Okay, how much of the stored crude needs to be sold and consumed before new crude value can be restored?
So I don't know that I have an exact amount of what needs to be sold and consumed, but I do know that the strategic reserves right now are somewhere between 60 and 65%. So, if let's say the government were to buy all of this excess crude oil, we would fill up those strategic reserves and we would still have excess oil. The refiners would have nothing to do with it because there's just no demand right now. I don't have an exact number. If it's something that you want to reach out to me offline, we can figure that out.
Okay, so thank you, Alex. Thank you very much. And we appreciate all you guys, Larry and Matt and Adam. It's good to see you guys. And it's great that you guys are supporting Andrew. And we've got a few people out there in LinkedIn land as well. Okay, so Doug asks, is there a buy for the average Joe? Joe, I'll throw this one out there. I think maybe you're talking about individual stocks or something to that effect. So I want to turn this around for a second. President Trump, here he goes with the politics. No, I'm not getting into politics, just making a point. President Trump tweeted yesterday, I think it was yesterday, we are going to protect our, domestic great oil companies and oil workers, et cetera. Does this mean bailout money? Like, the airlines are getting bailout money. Does this mean the energy sector is going to get some bailout money too?
It sounds like it to me. And, a lot of the energy companies are facing tough times right now. I mean, you see them cutting their dividends. Listen, you can speak more to equities than I can, but you see what's happening to the price as the price of crude oil was going down.
Lots of dividend cuts.
Lots of dividend
stocks are below my $20 rule. Go ahead. I'm sorry. Go ahead.
Right. No, but I was going to say for these producers out there, if it's costing them $30 or $40 a barrel to produce, and now they have to sell it for $20, they're losing money, and it's going to affect everybody.
So the concern in the general markets that could hit the economy, we'll call it energy complex contagion, is that a lot of these companies will go bust.
They could, and they're, hence the bailout.
So my feeling, Doug, is if you're going to take a shot in the oil sector, stick to the really good, solid names that you already know. Okay. The blue chips in the group are clearly Chevron and Exxon. There maybe are a few others, but I have an issue. I have a little rule with stocks that go under 20 and then under 10 and then under 5. Those are ones that I like to avoid. I'd rather wait for a better time. So I hope that helps you. And you're certainly welcome, Doug, to reach out to me directly. Tom is out there. Tom says, I have a bit of an echo going on. Judy, do you hear an echo? You can't put yours on. Okay. So maybe that was before. I think that was before we did have an echo going because somebody was listening to my stream loudly on their phone. But that's okay. That's been fixed. Thank you. Ivana asks, could you please explain what actually happened at expiration? May contract settled at 10:01.
Sure. Well, the day before expiration, it settled at minus 36 and change, and it still traded the following day. So it trades up until the close of business, which is 2:30 Eastern time on day of expiration. So there were still people out there that had contracts they needed to buy and had contracts they needed to sell. So throughout the course of the day, whether on any given trading day, the price is going to fluctuate. So we traded back up to, I think, a high of, I don't know, maybe it was $14 on the day of expiration. And yes, it did settle somewhere around $10 yesterday.
Okay, so just investors buying and selling, matching demand with supply. Finally, it settled up, at 10. And question from Brian Rockowitz. Question, if the pumps are pumping bare minimums just enough to maintain their lease contracts, how will this affect downstream, i.e. pipelines? That's a pretty good question. There are a lot of pipeline companies, Enterprise Transfer Products. There's a ton of pipelines, and they used to be popular because they paid really big dividends. But they've been in the dump too. So how does it affect them?
And this affects the entire supply chain. If less is going to be pumped and less is going to be transported on the pipelines and shipped through trucks and tankers, it affects everybody. Without specific numbers, it's
lower volume going through the pipes.
Exactly.
It's like fewer people going through the toll booth at the Midtown Tunnel.
Right.
It's their city's complaining they're not getting in toll money because nobody's using the paying the tolls. I guess that's how it works for the pipelines, right?
Exactly. And even though Saudi Arabia and Russia and Mexico agreed to cut production, they cut it to the bare minimum that may affect price, but that production cut doesn't start immediately. That's not going to start for, from the time they said it, about a month to 6 weeks out.
Okay, so a month to 6 weeks out. In the meantime, it's from what I understand, oil demand in the United States is back down to 1995 levels.
30-year lows, yes.
That's incredible. Well, we've got a few people out here also. We have Kirsten Carpenter is out there as well. I think she's one of your contacts. By the way, Kirsten, I just got the alert that you and I are now connected on LinkedIn. So thank you very much. And I'm just going to show real quick Andrew's or Atlas Energy's LinkedIn page. But by the way, Andrew, if people want to connect with you on LinkedIn, that's okay?
Absolutely. Please feel free to reach out directly to me or through Atlas Commodities.
Okay.
The website, you can reach out as well.
Okay. So here we have Atlas's LinkedIn page. Okay. And here's us, my little promotional over there. Okay. The artwork. And here's Atlas Commodities. So it's atlascommodities.com. I want to just take this off the screen. Andrew, I'd like to thank you very, very much for being here. We have a few comments and questions from some friends out there. I think we'll have to take those privately on our
offline
on our own time. But Steve Gindy is out there as well. Hey, Steve, so great to see you, man. I'm really, really appreciative that you took the time to join us. And I can't thank you enough, Andrew. Thank you for explaining this, and I will speak with you soon.
Thanks, Mitch. Thanks for having me.
You're very welcome. Take care. Okay, so that's Andrew Goldstein at Atlas Commodities in Houston, Texas. Andrew Goldstein, he's on LinkedIn. If you have any questions, you are certainly welcome to reach out to him directly. He's a very nice, affable person. He's very smart. And thank you all for tuning in. I'm going to end this broadcast now. If you have any questions, certainly that you think of after this broadcast, certainly ask us in the comments, and we will definitely get back to you. Thank you very much.